All right, well, we have been talking a lot about businesses navigating what's starting to feel like a period of uncertainty. Jamieson Wellness, known for its popular vitamin products, just came out with its quarterly results. And for some more perspective on what's happening with the business, we're joined in studio by the CEO, Mike Pilato. Nice to see you.
Nice to be here.
Let's start with what's happening with the business in the quarter that just passed and how you would describe what's happening with the business.
Yeah, the business is continuing to show great momentum. The consumer around the world is continuing to show a momentum behind health and wellness. It continues to have many tailwinds in terms of driving our category forward. We saw growth in market share gains in every one of our major markets. It allowed us to deliver a great year at plus 14% revenue growth on our branded business, plus 9% consolidated with some of our strategic partners or contract manufacturing business rolled in there. But we've hit all our metrics. We over-delivered our margin expectation and delivered on our cash flow expectation, which was a great year for us.
Okay, well, let's just pause for a second to talk about health and wellness as a category. It doesn't get as much attention in 2025 versus, say, AI. But as a growing category and somebody who's trying to, operate with what you've got and also look at where it's going, what are the biggest things you're watching?
Yeah, we're really watching the consumer taking control of their own health. So what we're seeing is this notion of self-care or preventative care continuing to be a main driver in the consumer's lives, and they really want to take control of their health. It's really a phenomenon we've seen post-COVID. With that, you're seeing things like sleep, stress. You're seeing immunity continue to grow. You're seeing sleep, stress, energy, and immunity really all growing as categories. And we're seeing that globally. It's not just here in Canada. It's in every country in which we participate today.
Okay, that's a nice segue to other markets. So I think I was just looking at your data on China, and if I'm not mistaken, you had massive growth there. Can you walk us through what's happened with your business in China?
Yeah, in 2023, if you just step back to the midpoint of 2023, we purchased our distributor partner in China and decided to go to China direct. We built a team of experts on the ground in China, and we are fully operating as an owned business out of Shanghai in China today. In 2024, we put a investment in marketing and in demand generation into the market, and we've seen almost 80% growth in 2024. That business is about to cross the $100 million mark on an annual average basis, and we're quite proud of what we built there, and we see a big future in China for our products where this Chinese consumer is really getting, again, behind this notion of self-care and preventative care and looking for brands of high quality from foreign countries like Canada that are known as some of the highest regulated standards in the world and really resonating with that Chinese consumer.
This is going to be a bit apples and oranges, but when I think about, for example, restaurant operators that expand into China, sometimes you hear about tailoring to the local market, finding different food options. Are you finding that the suite of offerings there is perhaps a little different than what people would be turning to from Jamieson in North America?
Yeah, we have a strategy in all of our markets. We call it globally consistent and locally relevant. And really, when you look at any market in the world, and China would be the same, it's kind of the 80-20 rule. About 80% of the portfolio or the categories that a consumer would focus on are the same globally. You have the same health needs everywhere you live if you're, as a human. Yeah. 20% would be a little different. And a great example for China, for example, is bone health or calcium. That type of category is a really over-indexed category versus Canada, where a category like vitamin D that would be over-indexed in Canada is under-indexed in China. So you just have to understand the various subcategories you play in and which ones play a little bit from an over-index to an under-index perspective by country. And that's what we do in every country that we're in.
Well, in late February, I can definitely appreciate that one. Increasingly, people probably in the home stretch of winter grabbing the vitamin D. Hey, the tariff story, we hear the word a million times, but in terms of the business, can you walk us through how you're thinking about it and how you think it impacts Jamieson?
Yeah, definitely all of the tariff news and the proposals and what's going on out there in the news is definitely a volatile time to be running a business. From a Jamieson perspective, we feel pretty insulated from it all, and I'll break it down into three buckets for you. Okay. First and foremost is our branded business, which is a majority of our business. It's our high margin business, and it's what we're focused on for growth. That business is insulated from tariffs today. The products that we sell in Canada, we make in Canada in one of our 3 world-class manufacturing facilities. The U-Theory brand that we sell in the United States, we manufacture in the United States in our manufacturing facility in Irvine, California. So finished goods for us on our branded business are not crossing the border in any material way, and
this
we
is a
feel
really
pretty good about it.
important point we should point out as well, because I think that, like, I was even seeing some stats on Costco, which they're a huge revenue generator in Canada, but they work with, they have suppliers here. In other words, this idea of sort of going across border sometimes is a little bit misguided in terms of how you actually operate a business.
That's right, and I think as Canadians, we really have to think about what's made in Canada for Canadians. And really figure out where are the jobs and where is the economy being driven here in Canada. For Jamieson, we have over 1,000 jobs here in Canada. We have 3 manufacturing facilities. We were founded in Canada. We're a 103-year-old company founded and operating in Canada with our head office just a few blocks from here. So what we sell in Canada, we make in Canada. And when we made our acquisition in 2022 of the U-Theory brand in the United States, it came with a manufacturing facility in the United States, and we make that brand for the U.S. in the U.S. So our finished goods don't cross borders.
Okay, did I let you finish your
There's 2 other buckets if you want to hear about them.
Go for it.
From a cost of goods perspective and how the tariffs are proposed today, we have 0 impact in terms of the Canadian retaliatory tariffs impacting our cost of goods on any raw materials coming across the border from the U.S. to Canada. If that were to change, we have a global supply chain where we dual or triple source pretty much all of our ingredients around the world. If tariffs were to impact our cost of goods in any way, we can move our source of supply around the world. And if need be, if we couldn't, we could always put some pricing into the market. At this point, we see no need to do that. We have no cost increases coming at us, and we're not looking to do that. The third bucket is our strategic partners business, which is our contract manufacturing business, where we make products for other brands. We do have some pressure on that business because we make for U.S. brands. Now, that's a low profit, low growth priority for us from a business segment perspective. As we make those brands for U.S. customers, those U.S. customers could be facing tariffs on import. That could put pressure on that business. But where there's risk, there's opportunity. And if those customers decide that, hey, we're going to cycle out of our Canadian contracts and manufacture in the United States, there are a lot of brands that manufacture into the United States and import into Canada or to other places around the world, and they'll be looking to move as well. So we'll be cycling out of some contracts and into some new ones in that segment if these tariffs were to come to fruition. Okay,
well, I appreciate you piecing that together. We're almost out of time, Mike, but it has felt like a period where Canada has been on the defense. You're a hockey guy, so but at the same time, now we're talking about let's get the strategy right for the long term. We don't always have this conversation, but we're having it now. Do you see an opportunity to grow, to be on the offensive side of of this story going forward? Do you think there is a Canada opportunity here?
For our business?
For you and for the country.
Absolutely. Okay. I think there's a massive opportunity here. I think Canada has some of the world's greatest talent. We have some great resources here. I think this is a great opportunity for Canada to unite and really move forward as a country and become stronger. We're a global company. We do business in 40 countries around the world. And yes, we have a big U.S. business, and we're quite proud of what we do in the United States. But we're also proud of what we do in Europe and what we do in Asia and what we do through the Caribbean, into Mexico. And we take advantage of global opportunities. U.S. is one country in our portfolio of products.
Okay, Mike, thanks very much for the breakdown. Appreciate it.
Thank you so much. Appreciate it, John.
President and CEO of Jamieson Wellness.